Gold hitting some of its lowest levels since February. Joining me today is Bill Baruch of iiTrader. He joins me on the line from Chicago. Bill, good to have you back on the show.
Thanks for having me this afternoon.
Bill, we got some excitement back in the gold market today with gold falling through the 1260 level. Why is this happening, Bill? And do you think we could see more downside here for the metal?
Well, it's only bad news if you're playing from the long side. And what we've seen was a consolidation wedge over the last month. The market's getting coiled up, and when you see that in the gold market, a lot of if you squint your chart up a lot, you get a lot of black ink on there. And as it coils, you're going to get a directional move. And a lot of volume was built in these June options that went off yesterday. So we started to see a move ahead of that. And the market took the downturn. There's some catalysts. What we've had was a stall out above 1,300, an inability to close above the 200-day moving average at 1,300, and as well the 50-day moving average at 1,305. But the Ukraine situation had to seem to take a step in a positive direction. In any safe haven, the buying that was found because of that was then coming out of the metal as well. So we took out the wedge, the downside, and took out some major levels, and to see the market more than $30 from the high yesterday.
On the flip side, Bill, we have equities experiencing a much-needed surge with the S&P 500 trading at a record yesterday. Is this partly the reason that gold is also suffering, Bill?
Well, the S&P, as the market just slowly grinds higher, little volatility, gold is seen less attractive. But now, S&P is hitting our targets here at iiTrader. 1917, 1919 has been our long-term upside target here for really well over 6 months. And ironically, that aligns with the all-time high in gold. So we're seeing this up here. We're starting to step into the short side in the S&P. And, we think this is going to slow down the sell-off here in gold. We also have the ECB meeting to look towards next week. And a weaker euro has also had a hand in pushing this gold lower, a stronger dollar. But still, there's a lot of focus on that ECB meeting next week.
Bill, we also have GDP numbers out this week and pending home sales. Do you expect this to put more downside pressure on gold?
I do think, as long as GDP can really, maybe not as bad as we saw about a month and a half ago, anything's going to be a little bit of an uptick from there. And I don't see that being too much of a mover as everybody really anticipates ECB, as well as non-farm payroll next week. Those are really going to be the major focus. And better than expected GDP may put a little more selling pressure on gold, but really, I think we're going to start consolidating down here. A lot of support from 1250 to 1220, but if we start closing below 1220, we're going to really start pressing the lows and likely take out new lows and head towards $1,000.
All right, Bill, let's wrap things up now. Key levels for gold and silver you're eyeing right now.
Well, about 1235 and 1220 to the downside. There isn't a whole lot that we're focused on as the market consolidates, between here and there at this 1250 level. But a close back above 1272 is what's needed to, for encouragement for the bull camp and encourage a consolidation higher. Really, we need to close back above 1295 and 1300 to negate this big down leg we've had. And anything other than that's just going to signal a consolidation. Silver, though, has been a great trade for us all year. We've been buying against the $19 level, working with clients to do that. There's many ways that you can buy silver. There's a 5,000-ounce CME contract. There's a 1,000-ounce CME contract. And options in silver really perform very well when this market moves. So we've been buying this $19 area. We haven't seen much action at all over the last year below 1875. So risk is limited with the stop below there. And then looking for a move above 1960 to $20. It would be a great trade for us here at iiTrader.
All right, Bill, that's all the time we have left for today. Thanks so much.
Great. Thank you very much for having me.
And thanks for watching this edition of Kitco News. Email us at newsfeedback@kitco.com. Thanks for watching.